All right, Tapna, thanks a lot for bringing us all of those details. Something else that we're tracking, the Finance Ministry appointed Committee on Private Equity and Venture Capitalist Investments has submitted its report to the government. They've recommended ways to accelerate the flow of investments into startups. Now, this report has also recommended ways to ease the regulatory burden as well as changes to direct and indirect tax structure in order to attract more investments into this space. So, Parikshit has more of the details from this report.
Yes, this report was prepared by a committee headed by former SEBI Chair M Damodaran and had former members of RBI, Finance Ministry and economic experts. It was submitted to the government on the 19th of December. Currently, the Department of Economic Affairs is examining the report. We learned that the government could consider these recommendations for the budget as well, especially on the direct tax side. The report has exhaustively recommended measures to remove regulatory friction and accelerate PEVC investments. One of the focus areas was to recommend ways to support capital needs of startups in a volatile environment. Among the recommendations, the committee has said that fund managers should not be burdened with GST on carried interest, and the tax should be imposed at the investor end, and the fund manager should be considered as a pass-through. Also, fund management service provided to foreign investors should be treated as a deemed export, and foreign investors should not be asked to pay 18% GST on availing service of domestic fund managers. The committee has comprehensively looked at requirements of global funds and held consultations with the DPIIT, RBI, SEBI and the DEA as well.
All right, Parikshit, thanks a lot for bringing us all of the highlights from this report. With that, we have to get into a short break now. But on the other side, we're tracking all of the cues from the commodity market. So stay tuned for that.